Hey, what's up, guys? This is Dr. Boyce Watkins, and I'm down here in Atlanta attending some meetings and whatnot. And I thought that I would come through and give you guys a quick update on a company I've been really excited about. I've spoken about this company before, but not in extreme detail. But I should let you guys know that I've been really bullish on Disney stock since the beginning of the pandemic. And Disney just released an earnings report, and it was really good, in my opinion. It was far better than what was expected. The company is losing a lot of money. Lost about $750 million this quarter. But this is actually good news. And the reason that Disney's losses were good news is because they lost money but didn't lose as much money as was expected. So I'm gonna kind of break this down for you on the Black Financial Channel in 1 second. Okay, so here's the deal. Disney reported its second quarterly loss. Now, I think this is the first time Disney's had two negative quarters in a row in at least, I think, 24 years. It's the first time they've had an annual loss in, I think, 40 years or something. But this doesn't bother me. This too shall pass. This is not a big deal. Um, According to the Wall Street Journal, Disney had a fourth quarter loss of 710 million or 39 cents per share. This follows the loss it reported for the third quarter, which was its first quarterly loss since 2001. So that right there is pretty phenomenal. I mean, that shows how well run this company is. This company doesn't lose money. This company doesn't has not hasn't had a negative quarter since 2001. And one of the things I like about Disney is Disney reminds me of Amazon. It's very well, shall we say, managed. I mean, they just know how to pivot. They know how to respond to changing conditions. I'm not telling you to invest in the stock market. This is not investment advice, but this is me telling you that I'm an investor in the company, and it's because I can tell when a company just knows how to make money, knows how to run a business. Now, the thing about Disney that's interesting is that Disney is probably the poster child of companies that were slammed the hardest during the pandemic. Most of Disney's money was being made through outdoor theme parks, all of which have shut down, through a cruise line, all of which has shut down, through shooting movies and distributing them all throughout the world, all of which has shut down. Movie theaters have shut down. So Disney's kind of like a guy who has a job and two side hustles, and he gets fired from his job. He gets sued for $1 million, and he loses both of his side hustles, and he's still able to figure out how to make ends meet and get by. Disney has been extraordinary, I think, in terms of how they operated through the pandemic. Because one of the things they did was they did a big pivot. One of their activist investors, or a group of them, got together and said, "We need to pivot like crazy in response to the pandemic. We have to go digital and go hard." So they did that, and they increased their number of subscribers to Disney Plus from about 57 million to 73 million in just a quarter. That's 16 million. Now they're still far short of Netflix. Netflix has about 195 million, but they're more than 40%, about 30 to 40% of Netflix. I think that's what, about 40%. So Disney's gonna catch Netflix. Make no mistake about it. They've got live sports. They've got these great movies coming out. If they keep investing in their streaming service, they're gonna kill it. And then what's gonna happen is all those cruise lines are gonna open up. Boom, more money coming back in. All those films are gonna be, those shoots are gonna open up again. Boom, more money coming in. You know, the theme parks, cruise lines, all that stuff, more money, more money, more money. Their primary streams of income. Live sports is going to open back up the way it did before. Boom, more money. Disney is going to become almost as good of a moneymaker as Amazon. I mean, just in terms of knowing how to make money, Disney's good at it, and I've just been a big fan of that. So I've been bullish on Disney for a while. What I did was I did something that we talk about in our stock options class called a stock replication strategy, where you buy options in a certain way where you replicate the ownership of the stock. And I've made a ton of money from it. But here's the thing, that's just the beginning. Disney is not done making money. I think Disney is going to become a major player in the streaming game. And this company is going to be stronger because of the pandemic, because the pandemic taught Disney how to be creative about how to make money during really difficult times. Disney is the epitome of Disney is like a person who goes through really tough trials and tribulations and comes out stronger because they have to develop a whole new skill set in order to survive. So Disney's going to have everything it had before the pandemic plus everything it gained during the pandemic. And Disney, to me, is one of the leading winners in terms of lessons learned in the pandemic. They developed a whole new line of business. So now that guy who had a job and two side hustles who lost it all, now he's got a job, two side hustles, and two more extra side hustles that are making twice as much money as his old side hustle. So now, when things go back to normal, mark my words, Disney is going to be an ATM machine as the expectations from analysts start to go up and banks and analysts, start to give buy recommendations on the company stock. You're going to start seeing the price continue to go up, in my opinion. This is my humble 2 cents. Nobody can really truly predict everything, but I wouldn't be surprised to see the stock continue to go up. I also wouldn't be surprised to see the company continue to exceed earnings expectations. That's where you get a double bump. Stocks are moved by three things: information, expectations, and realizations in comparison to expectations. Information, meaning we now have information that Disney's a better company than before. They've got new lines of revenue they didn't have before, 73 million subscribers to their online streaming service they didn't have before. That's information. Expectations means that, oh, well, because they have new revenue streams and they're bigger, we expect they're going to make more money. Boom, stock price goes up because of that. And then there's realizations. Oh, we thought Disney was going to make an extra $3 billion this quarter, but it turned out they made an extra $5 billion this quarter because they've got stuff up their sleeve we didn't even know about. Amazon was the only other company I can think of that really did that on a consistent basis. I think Disney's a candidate for that. Very well run, solid company, good solid long-term investment. Also, it's a great company to introduce your children to investing if your kids are into Disney. Now, some of you may not like Disney. I think I saw a brother that said something about he doesn't like Disney for personal reasons, but some of you do. Some of you have kids that watch the Disney Channel and all that stuff. Well, if you're teaching your kids how to invest, I think Disney stock is an easy way to explain investing to your child, because they can actually send you the share of stock and it's got all their favorite Disney characters on it. So I'm not telling you what to do. I'm just telling you things I've seen from parents, and that's what it is. So let me show you guys something. We have a Black Stock Market Challenge that's totally free. If you are not familiar with investing, you want to get better at it, just go to blackstockmarketchallenge.com, do the challenge. It'll make you better. And you can do that. There's the URL. Write that down. And then here's another URL, blackmillionairesoftomorrow.com. That's our program for children. If you have kids and you want them to learn how to be wealthy at an early age, we are big believers that in order for Black people to get ahead, we must teach our children how to invest early. Don't wait till they're 20 or 25 or 30 or 45 years old. Teach them when they're 5. The same way we teach them basketball and football at the age of 5, teach them how to invest at the age of 5. And that way you're giving them a life of liberation. You're getting them out of the struggle. Your child won't be 30 years old talking about how hard it is to be Black. They'll be enjoying life. They'll be living their best life. So give that gift to your children. Feel free. Go to blackmillionairesoftomorrow.com. The first month costs literally $1. So, and there's a money back guarantee. So if you don't think this is the best thing since sliced bread, this program is world famous. Everyone loves it. If you don't think it's the best program since sliced bread, then let us know. We'll give you $1 back. First month costs $1. Blackmillionairesoftomorrow.com. It's right there on the screen. All right, guys, I got to go. Hit the thumbs up button, hit the thumbs up, share, and subscribe button before you go. I'm about to walk into a meeting, but I just wanted to stop in and talk to you guys about what I saw with Disney. And I know I'm excited because, like the portfolio went up. So it's always a win. Talk to you guys later. Have a good day. Peace.